Hello. Welcome to my channel, my dear friends. My name is Avilash and I'm a trader next door. In this video, I'll be analyzing the chart of gold USD. So if you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So my dear friends, this is the 1 hour chart of gold USD in front of us. And as expected, we got to see some volatility after the retail sales yesterday. And as we all know, today is a big day because of FOMC, the biggest event of the week. Market was waiting for FOMC, because of which market was not going for any particular direction. Market was just showing spikes. This is the economic calendar, and you can see that 15 hours left for the FOMC. So while I'm recording, so just go to any economic calendar, change the time zone, and just see when the news is coming out in your country. Timing. You can see here dollar flat after retail sales data. Yuan falls to 9-month low. Dollar finds support on higher bond yields and weak stocks. And if you look at the DXY dollar index, you can see that there is not much change on the structure of the market here. Dollar index is standing at 103.20. As expected, dollar index is inside a range right now. The range is 102.50 on the downside and 102.80 also. Okay, 102.80 is the minor support, and 102.5 is the major support before the FOMC. And at the top we have 103.50 to 103.60. This is the range of DXY right now, and hopefully DXY will be inside this range only before FOMC. So you can expect a sideways market or a choppy market before the FOMC, because before any big event we don't get to see much volatility. Market prefers to stay silent. And the dollar index is in uptrend for quite some time, and if we look at the reasons, that we won't find any strong fundamental reason. So yes, there is a possibility that we may get to see a drop after FOMC. If market drops after FOMC, then yes, we have some support around 101.50. Okay, so in case market drops or dollar index drops after FOMC, 101.50 will be the support, because the support levels like 102, 105, 102.50 are not very strong. So I don't think so they will be able to hold the market. 101.50 will be the next immediate support after news if DXY drops. Okay, let's wait and watch. And as I always say, my dear friends, do not gamble with your hard-earned money during the news. Market will give plenty of opportunities, so you don't need to gamble. Now let's look at the chart of gold here. So as we all know that gold is in downtrend for quite some time, and as expected 1900 level did a fine job, perfect job, because of the contracts data. If you look at the contracts data, then we can see that there have been some reduction, okay, but still significant number of contracts are still present around 1900 level. So I think that still there is a possibility that after FOMC, market will try to protect this level here. If the same numbers remain, then yes, there is a possibility that after FOMC we may get to see upside on the chart of gold, and before FOMC market will try to protect the level. This is my theory, I can be wrong as well, okay. So 1903 is the current market price here. So before FOMC, before the news, in case market drops, then yes, our previous levels are still very much intact. The previous level of 1893 to 1896, I told you guys that this is a support zone, and yesterday we got to see a perfect bounce. 1893, 1896 support level is still very much present. Before FOMC, if market drops, observe the market around this area. Hopefully there will not be crazy volatility. Under normal circumstances, you can expect the market to take support around this area. Once you will see market taking support, once see the market is showing price rejection from below, market forming hammers, you will get the confirmation that buyers are still present. Yes, buyers are still present. Okay, and you can go for a buy position. And after FOMC, if gold surprises us, gold breaks 1890 level, then there is a high chance of a big fall in the market as well, and you can go for a sell, but better avoid. And yes, to be honest, okay, I think that a market will be going up after FOMC. I may be wrong as well. One lesson that I have learned in life, so market, is that do not try to predict the market, go with the flow. And especially during the Asian session and European session, when we can see that the market is not very volatile, 1900s level is still very much present. Not because we have some solid technical reasons, but yes, the contracts data are showing the good presence of buyers around the area. And those who are looking for Hindi videos, you can subscribe to this channel Priyanka Talks. The link will be in the description. Okay, यहाँ पे हम लोग हिंदी वीडियोस अपलोड करते हैं, मैं और मेरी वाइफ. एंड द बेस्ट पार्ट इज दैट सुबह आपको वीडियोस मिलेगा इंग्लिश चैनल में, एंड शाम को जस्ट यूएस सेशन से पहले आपको यहाँ पे वीडियोस मिल जाएगा, ताकि आप पूरा डे ही अप टू डेट रहो. हमने सजा ही इसे इस तरीके से है. देयर हैव बीन मैनी रिक्वेस्ट, बहुत लोग रिक्वेस्ट करते हैं कि हिंदी में वीडियो डालिए, तो इसीलिए हिंदी चैनल को शुरू किया है. अगर आप भी हिंदी वीडियोस की तलाश में हैं, अगर आपको हिंदी वीडियोस पसंद है, तो आप सब्सक्राइब कर सकते हैं. आपको लिंक मिल जाएगा डिस्क्रिप्शन पे. नया चैनल है, प्लीज सपोर्ट अस. Now back to the chart of gold. So these are the two levels if market shows downside, and on the other hand, if market shows upside, because you can see that market is trying to recover. So you can see that on the 1 hour chart of gold here, the 50 moving average is playing the role of dynamic resistance for quite some time. So during the day, yes, you can look for some resistance around the 50 moving average. So it will be around 1907 to 1908. But the problem is that the market has already tested the 50 moving average many times. So as a result, taking a sell position around the 50 moving average can be a little bit risky. So in that case, you can look for, yes, for resistance around the 100 moving average here, around 1910. Okay, yesterday we got a good reversal from the minor resistance we talked about. So today we can look for some resistance around 1910 level. But to be honest, 1910 or the 100 moving average is not very reliable right now. And as I'm recording the video in the Asian session, so it is difficult to tell, okay, how the market will be in the European session or US session right now. Because simply suggesting a position on the basis of a moving average is not my style, right? Not my style. Okay, still, okay, you can look for some resistance around the 100 moving average around 1910 level. If market reverses, you can look for a sell, but be careful and follow proper risk management. The best resistance before the news is around 1919 to 1923 level. Yes, 1919 to 1923 level is the best resistance on the chart of gold before news. But I don't think so market have the power, ability, strength to go till 1990 level. In case market goes, hits the level, observe the market. If market reverses, you can look for a sell. But keep in mind that these are the technical levels. FOMC is a big event, so market may be very volatile and no level may work. As a trader, it is very essential to understand when to trust the technicals and when to go with the fundamentals. So after FOMC, try to follow the trend of the market instead of looking for reversals, and do not gamble with your hard-earned money. Right now, we don't have any major levels in the market, so as a result, you need to be careful. If you are a trader with low capital, very in a problem right now, in a tight spot, then this is not the ideal situation right now. If you get market at 1919 level, 1893 level, and if you see reversal, then you can go for the position. But otherwise, it is not good to trade on each and every level of the market. And especially the resistances are not very reliable. The levels, okay, though the market is in downtrend, but we don't have any reliable resistance level. The reliable ones are far away from the current market price. So yes, you can look for a sell position around this level, but be careful. 1919, 1923 seems to be a good level, but chances of going there is less. Let's wait and watch. And that's all from my side, my dear friends. Bye bye, take care, be careful, and follow proper risk management. Okay, so this is my analysis. I can be wrong as well. No trade is 100% accurate, so do not trade blindly.